What aren't we being told about wealth redistribution? The middle class has been hollowed out. What do we need to know and what should we do? Well, that's what we're going to dig into in today's video. Welcome everyone. Hope you are doing well. It is Monday, June 9th. I'm Ric Bender and welcome to Finance Lab. Wealth redistribution is something that we've been watching for a long time. The middle class has been hollowed out. But what's happening now in the economy? Well, we're going to bring some data to you that you need to know about. Did you know that according to a Fed survey in late 2024, 50% of the American public cannot absorb a $2,000 emergency expense? 1/3 cannot absorb a $500 emergency expense. The consumer, the middle class, is really getting hit. Today, we're going to look at some data and we're going to conclude with some solutions. So let's begin with 2008. The GFC of 2008. Most of us are aware of it. It's relevant. It's close enough to remember how destructive that was to so many people. Now, we could say that was a mortgage crisis, that was a derivatives crisis, but ultimately, as we define what happened, it is a liquidity crisis. I point this to you so that you can understand what I'm about to show you. Are we looking at economic signs and data that are stating that something far worse than 2008 crisis is coming? Well, take a look at this chart. As you understand now that the crisis was a liquidity crisis, as you look at this chart, you can see that the liquidity crisis that we're currently in is far worse than the GFC. Now, when we take a good look at the global economy, the devaluation of the dollar, gold purchasing by central banks, you need to put all these things together so that we can sit back rationally, intelligently, and make personal decisions to isolate ourselves as much as possible or to protect ourselves from the monetary fiat crisis that's happening. This is really important. As you understand the 2008 crisis as a liquidity crisis, comparing to what we are currently looking at, you can see this next crisis is going to be very significant. Now, I want to share with you a quote from an ex-post. The American political and financial systems executed the largest wealth transfer in human history. In a sleight of hand too subtle for most to detect, Wall Street and its political allies orchestrated the systematic plunder of the middle class, enriching themselves with shifting the burden onto the public through soaring government debt. While the Federal Reserve's complicity, the wealthiest 1% now command over 1/3 of the nation's wealth, leaving everyone else to foot the bill. The complicity of the Federal Reserve. Remember the 1% and all the protesting? The free money that basically made bankers very, very wealthy. The hollowing out of the middle class. Government debt, high taxation, and of course, inflation that we've been dealing with. These are difficult days. There is an economic crisis that we are dealing with. And unfortunately, government debt isn't shrinking. What we are now looking at is government debt reaching historic levels. Look at this chart, $1.1 trillion. We've crossed the $1.1 trillion. U.S. government interest expense has gone parabolic in the past few years. and has now crossed a staggering 1.1 trillion. At this rate, it's expected to reach 1.7 trillion by 2034. U.S. debt is now becoming a major concern. It's been a major concern for quite some time, but it is getting to the point now where foreign investment is really struggling when it comes to buying our treasuries. In fact, we just bought back 10 trillion of treasuries. The interest in our debt is dramatically shrinking the debt of the U.S. So we have an issue that we need to be paying attention to. Are we headed for a debt crisis? Or are we in a debt crisis? Personal savings rate has fallen to an historic low of only 4.9%. There is a great deal of pressure on the consumer. There's a difficulty in affording things, and we see government debt continuing to increase, and the complicity of the Federal Reserve and Wall Street's game is not ending. We need to do steps on our own for our own personal safety and our own personal well-being and financial picture. The de-dollarization is accelerating. The dollar needs to become a lot less valuable because government debt continues to increase. As government debt continues to increase, foreign investment in our treasuries becomes less and less attractive. As you add these things together, we end up building a very, very serious picture. Now let me show you this chart from Global Markets Investor, the de-dollarization trend. These graphs and these charts show what we're dealing with. This is not me making stuff up. The US dollar share in international reserves has dropped 10 percentage points over the last 5 years. That's the lowest in over 3 decades. At the same time, gold share has doubled to 23%. That's the highest in 30 years. In other words, this is extremely telling. The main beneficiary of the de-dollarization is gold. Bottom line. This is the way you fix the monetary mess that we are in. Coupling once again the dollar to gold or going to a gold standard. But I don't see a gold standard happening because politicians don't like it. But maybe things are getting so bad that, well, serious steps will be taken. Listen to this. World governments are issuing more debt than ever before. Globally, the debt that is being raised is absolutely insane. Global sovereign bond issuance hit a record $18 trillion in 2024. World government bond issuance has nearly doubled since 2019. This is why we've heard Jamie Dimon talking about the bond market is going to crack. But he said, don't worry about it because the Fed will step in. Print more money. Reduce purchasing power even more. Hollow out the middle class just a little bit more. Over the last 5 years, the government has issued more debt than in the 8 years before the 2020 pandemic. Historically, high public spending on social programs and defense, new tax and spending policies, as well as elevated interest rates, have been behind the massive surge. The trajectory of global debt is unsustainable. The path that we are on is serious. Now, what do we see some of the largest economies or central banks in the world doing? Well, they're buying gold. Listen to this headline. Bloomberg ran on June 6th. China Central Bank extends gold buying streak for 7th month. We are seeing central banks, China, other nations buying gold, seeing the de-dollarization, debt increasing, the bond market ultimately collapsing, the Fed stepping in to print more money. We need to take steps ourselves, and this is why we are actually advocates for sound money. I believe sound money is the only thing that can fix this. There is a monetary reset coming. All you have to do is open up your eyes. It will be here. Listen to this. This was from Birch Gold Group. Another $3.8 trillion in debt makes $4,000 gold the new baseline. Listen to this. This is also from Birch Gold Group. Could Basel III endgame drive gold to $6,000? Now, Basel III endgame has been delayed, but effective July of 2025, essentially, although banks are fighting it, gold would become a tier 1 asset. Full valuation of gold. The gold price will climb. Here's what we're seeing, folks, right before our very eyes. De-dollarization increasing, government debt increasing. More than likely, the Federal Reserve either lowering interest rates or printing money, and ultimately the bond market collapse and crisis. If we step back and say, what should we do as individuals? It's sound money. It's physical gold and physical silver to protect yourself from things that are out of our control. I can't control things that are out of my control, but I can control and I can take action on things that I do control. And one of those things is protecting our financial future and legacy and my family's with physical metals, hard assets, real money. Thank you for joining me today. Look forward to hearing from you in the comments below. If you like what we're doing here and you haven't subscribed to the channel, consider subscribing to the channel, share your thoughts, and also hit that notification bell. And I will see you next time.